Hey guys, welcome to CXO Conversations live from IFF 2026 in Kigali. I am super glad to start this series of podcasts with a good friend, Steve from Mojaloop. Steve, welcome to CXO Conversations.
Thank you, Matteo.
So let's start by, the classic couple of minutes on, your life stories and, how we ended up actually, meeting not for the first time in Kigali. And by the way, guys, this could be in Italian. Steve is almost a natural. I know you have a past in Italy, but, for sake of a broader audience, we'll keep English.
Perfect. So you want me to talk about what I've done, what Mojaloop is? So yeah, very quickly, if people don't know what Mojaloop is an open source foundation that has a platform for developing inclusive instant payment systems, whether that's at the national level, primarily for central banks and national hub operators to build national public infrastructure for payments. But then we're also seeing that a number of cross-border and regional systems are being built using Mojaloop, as well as some subnational systems in countries that already have instant payment systems, but are using it for becoming more inclusive, adding new use cases, etc. So those are generally what Mojaloop is used for. But fundamentally, as a nonprofit, our mission is to drive financial inclusion. We just have a very specific way of doing that, is to say, like, our little part of financial inclusion is making instant payment systems more inclusive and lower cost. So yeah.
Good enough. So tell me, you're now based in Rwanda.
Yep.
Right? When did your love for the continent started? How? And, tell us a little bit, what brought you here, basically.
So anyone who's here right now, we're in the middle of rainy season. It's not, but the people and the weather here and the structure and the city itself is just incredible. The country is incredible. So it's not a hard sell. And in particular, as soon as I moved here and I realized just how many other people are starting to move here when they have the opportunity to choose where they go. A couple of years ago, we were looking at actually also Portugal, because so many people we knew were saying, well, if we can move anywhere, it's a great place. And now I'm seeing that we're not alone. My family's not alone. There's a lot of other people who are saying, Kigali is maybe the next Lisbon. We hope not, because it's pretty nice how it is. And so that was really where it was for us, specifically for Kigali. It is just such a great place to raise a family. Helps for the fact that Rwanda is also such an innovator when it comes to everything digital. And so the idea of an open source national payment system was a little bit of too far of a leap for a lot of countries, but not for Rwanda. And so that's why they were the first country that actually took on Mojaloop as their instant payment system. And now 10, 15 more countries in Africa are following their lead. And so the other benefit for me professionally is it's also nice to be able to make sure that as we're watching how the Rwandans are using Mojaloop, those lessons need to be shared to the other countries. That's the benefit of Mojaloop. And so being closer on the ground, being able to visit with the R-Switch team, the RISA team, the BNR team, to see what benefits and challenges they're having, allows me to very quickly spread that to other countries across Africa. So it's professionally. But I'd say across my life, I've lived I think I lived about 10 years in Europe. I lived about 10 years in the Middle East. I lived almost 10 years in South Asia and Southeast Asia. And my wife and I have just always been wanting to move to Africa. It's been something that's been for a long time. And when we first met, it was actually probably one of our first conversations. We just weren't sure when or how, and it took us 10 years. But yeah, then the opportunity for Kigali came up.
Amazing. So, Steve, since we know each other, I learned one of the acronyms that I wasn't used to, the mythical IIPS. And we need to talk a little bit more about it, because this is a podcast, right? And, the audience will be very sort of spread over, culturally speaking. So inclusive instant payment systems, why it matters, and what it is, the relationship between this and financial wealth rather than financial inclusion, because inclusion, it would be a common sort of a substantive in the name. But why is it important?
Okay. And so first thing is the acronym IIPS, or Inclusive Instant Payment System. The funny thing is, since I've been working with Mojaloop, since I've been working with Inclusive Instant Payment Systems, we've actually gone through, I think, three or four acronyms. When I first started,
I didn't know that.
Yeah, when I first started, it was RTP, real-time payments, and then for some people it was RTRP, real-time retail payments. Throughout all of this process, I think some people are calling it fast payments, and then there was a move towards the term instant payments, because the idea of fast, it's not fast, it's instant. Fast compared to most payments could be a day.
Fast is good, but it's not as good as instant.
I mean, if you're standing in front of a merchant, it's got to be instant. It can't just be fast. And so that's why I think people within our community and the people we work with, we're very fast to go to, we're very interested to go to instant. And then as a differentiator, because there are other instant payment systems in the world. In the US, there's something called Zelle. And in the UK, a lot of people know about Faster Payments UK. But if you compare that to some of the things that we're building with Mojaloop or other countries like Pix, where it's not just an instant wire transfer for people sending $200 to a friend, it's actually something that cuts across all use cases. It's not just for P2P transfers. It's merchant payments, it's government payments, it's salary payments. It becomes the rails for moving money instantly for any use case, from any individual to any organization to any across the entire economy in a very seamless way. And so that's the difference. And also that it's specifically designed to reach the last mile. And so those are some of the differences between an IIPS, an inclusive instant payment system, and just an IPS. Whereas an IPS it's still 24/7, it's still a push payment, it's still interoperability across all of the financial institutions, but might not have that focus on really being relevant to every aspect of a person's life. And so then to get to your second, so yes, it is about making sure that's payments is kind of an onboarding into digital financial services, but obviously, and we can talk about the ways that digital payments make the life better for a lot of people, for example, but primarily small merchants who, for them to go pay a loan, for them to go pay a bill, for them to do lots of things, they have to close down their shop, lose money on their shop, and go make a payment. So for them to be able to do this and pay anyone, anywhere, pay their suppliers, everything instantly, that's much better for them. Also for them to be able to receive payments instantly. If you're talking about a credit card transaction, it can take days for them to actually get the money. Whereas if it's a very small micro enterprise, that makes a huge difference whether they get paid instantly or they get paid a few days later. And so that's the benefits, the payments part. But like you said, let's talk about the wealth aspect of it. And then there's two pieces that I'd like to talk there. One is, which is easier first, is the entire country. So when we're talking about digitizing transactions that are currently done in cash, I mean, big transactions are already usually done through bank transfers.
For obvious reasons.
Yeah. And so those go faster. Awesome. But the cool thing is transactions that are currently the kinds of transactions that most people say, this will always be cash. Those become digitized. But that's not magic. That money then is sitting in a bank, and it's sitting in a deposit account solidly, and it's moving from one deposit account to another deposit account. And so what that means is that the banking sector itself starts growing in terms of the number of deposits. The cost of cash for the country starts going down. So from a national perspective, we can think of IIPS as a way of actually growing the economy. You reduce the cost of cash on the economy, which there's a huge cost of cash on the economy, not on a per transaction basis. But then you also increase the amount of deposits. Increasing the amounts of deposits means you can increase the amount of capital available for lending. which is what grows an economy. So that's one of the biggest second order effects. Then the cool thing about this is that at the same time as you're growing the amount of capital available to lend out, you are creating a digital footprint or a digital tracker of more people, more merchants that currently, than in the past, did not have. There was no record of what they were doing, and so it's very difficult to offer them a loan. So at the same time as you're growing the amount of capital available to loan in an economy, you're also making more merchants lendable, and so that can actually, Then we get into the fact that hopefully you're actually growing the ability for small businesses to have the capital they need to keep moving and to keep growing.
That is why, Mojaloop belongs to this purpose-driven business, right? Oriented type of companies. But actually, I wanted to go back a little bit into, you're going to simplify, right? So one country after the other, right? So Rwanda is the poster child of IIPS in Africa. And then, slowly after there are, the other 53 countries, of the continent. Some of them, by the way, they already have instant payment systems. Not all of them, they have the inclusive ones. My question is, and I know that you have been talking about this a lot, but again, is for, let's say, general purpose culture, of our audience, is intuitively, I would say that if all 54 countries have an IPS, it all of a sudden becomes much easier to make these ecosystems interoperable, right?
Definitely. Yeah.
But how easier? I mean, what is it going to happen? And I mean, do you need someone with that says, okay, me, Nigeria will start talking with, Liberia, Ghana, and Cape Verde, and then, Morocco will say yes, and me, I'll talk with, how do you see this evolving? What's step 2 and 3?
Okay, so the first thing is to say that one of the reasons why Mojaloop is open source, I'm going to take a step back a little bit. One of the reasons that we talk about Mojaloop being open source is because we're talking about critical national infrastructure, which means we want every country to own their own digital public infrastructure, including payment systems, without having a foreign company be the one that controls it. So, and I get to this, is because if you want every country in Africa to be able to have seamless payments across with everyone using the same system, cool. I mean, the credit card companies have done that to a certain extent for a certain class of people, for the whole world. The problem is that each country doesn't have their sovereignty over their infrastructure. And so as countries are demanding sovereignty, then we're adding an additional complexity of the fact that now you have all of these different IIPSs that all look quite differently, or look quite different. And that makes it a little bit harder. And so this is what we're trying to do, is offer sovereignty yet standardization. And so that, at least from a technical perspective, that can be done easier if we all agree on some common standards. Again,
so you're a bit of a Swift of IIPS?
No, Swift is
the standard.
The standards component of it. Yeah, on the standards component of it. So, but we partner with Swift, and in the same, I would say, in the same way as Swift is a proponent of ISO 20022, but they don't own 20022. In that way, yes. And so again, there are certain standards of how we think transactions should move in an instant payment system to make them more inclusive. And so we are proposing those standards. So use Mojaloop, don't use Mojaloop, but please consider these protocols as a way of making it more standardized. And particularly for cross-border, because there are some challenges with instant payments that are built specifically for domestic to translate those into cross-border. Most instant payment systems were designed in a way that it's assumed that it's one currency and everybody's on the same, under the same regulator. Which means that all of the checks for AML and CTF don't have to be done. As soon as you start talking about cross-border, then a lot of additional checks and FX and all those things have to be done, and they have to be done in a way that can happen in real time, and without dramatically increasing the cost. And so, we do think that the standards we've created are specifically the thing that will help create lower cost cross-border transactions. But you then you want to say, okay, how is it going to happen? Even domestically, when we look at interoperability, when you start seeing Bank A and Bank B and mobile money company C start building bilaterals between each other for specific use cases, that's the moment that the market is demanding that use case be interoperable between financial institutions. And in my opinion, it's the same thing for cross-border. At the moment that you start seeing the instant payment systems or the domestic rails, we say, for 3 countries start to talk about, hey, we're going to do cross-border as a bilateral because I want people in Rwanda to be able to pay people in Tanzania instantaneously. That's great. And that should be the moment that we say, okay, that clearly there's starting to be a market demand for these instant payment systems to be connected and to be connected in this way. And then what we should be looking at is great. That's what the customers, that's what the citizens are asking for. That's what the switches can do. That's what the central bankers want. Now, how can we generalize those to some of the regional systems so that the same way in which that bilateral was created can be replicated, which is exactly what happened in your neck of the woods with Project Nexus. There was the Singapore-Thailand connection as a bilateral, which then got generalized to the rest of ASEAN using the ASEAN 5. And I think that model is what we hope for. And so in Asia, you've got ASEAN doing that with Project Nexus, and here in Africa we have more than just ASEAN. So we've got COMESA, which is building a really innovative one, with a lot of lessons for others. We've got TCIB and SADC. We've got ECOWAS looking at a regional system. We've got EAC looking at a regional system. And so I think we're going to see more and more of those regional trade organizations look at how interoperable payment systems following the bilaterals that their individual countries have built can be generalized for their regions, again, similar to ASEAN. Then the next trick is going to be connecting those together. But that is not to take away from efforts that PAPS and SWIFT are doing to go ahead and start doing that on a much bigger scale. So the way I see this happening is you've got those looking at Pan-Africa, like PAPS. You got those looking at global, like SWIFT and Nexus, and then you've got those looking at regional systems. And I think the moment we're still in a period where that's healthy competition to see what are the best standards. And eventually, though, I think we'll see much more of the interconnection of the regional systems together with a few folks like SWIFT who are connected to all of those regional systems.
And lastly, I believe that, actually, no, I want to ask it straight. So if you were an African entrepreneur today, building, for example, microcredit or like cross-border remittances or cross-border payment solutions, how smart do you think it is today to get closer, to this IIPS infrastructure in different countries? Because I suspect that, once the infrastructure is available, that will be an avenue of opportunities for plenty of entrepreneurs, to come, and sort of build solutions on the top of it, right? This is the ultimate goal as well, right?
Yeah. 100%. So we're talking about infrastructure here. We're not talking about end user experiences. And where entrepreneurs, particularly in a local entrepreneur for regional or national, they're the ones that know the customers in their markets. And so they're the best opportunity to actually reach those customers with a great customer experience built on top of the IIPS. And so I would say my recommendation is first start with how do you build systems on top of an IIPS domestically to get to know how domestic transfers are working, and then figure out how to do it cross-border. Because I do think that, now that being said, it also depends on the not making a business investment recommendation to entrepreneurs, because we are building infrastructure and central banks are building infrastructure. It takes time. So if you're looking for a return on investment for your product in the next 12 months, then that's a tough sell. And a lot of entrepreneurs, they need revenue next month, not in the next 12 months. And so I would say if you're looking at building something and your timeline is is in the next 6 months and your country doesn't have an IIPS, probably you should be focusing on how do I build bilateral relationships with individual financial institutions to test the viability of my product in the market. And then, but always keeping your eye on I don't want to have an exclusive with this one financial institution, because once there is interoperability, then I have the ability to partner with all of the financial institutions, and then also starting to think about the how does that relate to cross-border. Because if this infrastructure play happens between these regional systems for IIPS, the idea is to continue to make the cost lower. When you make the cost lower, I mean, if a cross-border transaction currently costs 10%, it's not like that 10% just disappears into the ether.
Yeah.
Somebody's making money off of that 10%. And what that means is that what we're trying to do is restructure the system so that some of those intermediaries don't get to rent seek quite as strongly as they currently are. And so we're going to have to increase competition on certain things like FX and settlement to reduce that cost. And so some of the bigger folks who are a big chunk of that 10%, if there's an African entrepreneur who finds a way to offer a better service that finds a business model that doesn't depend on rent sinking, I think they're going to have a huge opportunity. Some of the ones who are currently focused on their point-to-point integrations and therefore their rent seeking, I hope that we're moving towards a world where the regulators are able to build this infrastructure that reduces their ability to rent seek, and they have to change their business models. And sometimes big companies that are used to making good money on rent seeking are not so good at changing their business model. So I think there's a huge opportunity for local entrepreneurs and regional entrepreneurs to break into that space.
Now, is this what it started happening here in Rwanda? So the infrastructure is available, right? So, and since you're based here, we are in Kigali, so let's do maybe a 1-minute call, for the local entrepreneurs. How do we even physically, get to interact? Go on Mojaloop.com.
I mean, there's Mojaloop.io to experiment, and you can find all the documentation there to experiment with the APIs and check it out. But the other thing is that, I mean, Mojaloop is open source, and so the way that the generic APIs are written are not exactly the way that our switch is using the APIs, and so they have their own everyone's going to have a slightly different messaging format. So, and our switch has a lot of APIs available that local entrepreneurs can look at. So, I definitely think they should look at Mojaloop as a core, get to understand it. But then it's also going to be important for them to understand how our switch has. But I would say our switch did an amazing job of reaching out to local entrepreneurs. But also my pitch in my is that we work with national switch operators like our switch all over Africa, all over the world. They are given a huge responsibility to build the payment infrastructure for countries, and they are largely under-resourced. And so there are a lot of times, unfortunately, for a lot of the entrepreneurs, they get frustrated with the responsiveness of the national hub operator. And that is a problem. The problem is not that the national hub operator doesn't want these fintechs to be connected into their switch. The problem is they just don't have the bandwidth. And so my call is not to the entrepreneurs who are, especially in Rwanda, are eager to connect into the national infrastructure. And it's not to our switch, who is eager to connect with these entrepreneurs and allow, because the entrepreneurs are going to be the ones driving more transactions through our switch. Everybody knows that. That is a known thing. My call is to the people who support the national infrastructure projects to make sure that component is adequately resourced, and driven through our switch and every other national switch operator, to make sure that outreach is resourced, and that the ability to connect and have a business model around bringing in local entrepreneurs is resourced. It's a resource intensive thing for the national switch operator, and they are. Trust me, they are not lazy people. They're some of the hardest working people in payments I've seen. So they really want to. We just need to get better at resourcing that particular component of their business.
I believe this call is the perfect way to end this amazing conversation. Steve, thank you so much for being part of it. Amazing insights from someone who's actually living here. So that was CXO Conversations. Steve, thank you very much.
Thank you, Matteo. This was super fun.
And guys, as I said, CXO Conversation, and now the magical words I will end up every single podcast. This is a wrap.